Hello, everyone. Welcome to Chicago Booth's Economic Outlook 2023. My name is Madhav Rajan, and for those who don't know me, I'm the Dean of Chicago Booth and the George Schultz Professor of Accounting there. Today, we have a huge number of virtual attendees from all over the globe. Thank you all for being with us. I'm truly grateful that you're taking the time to engage with the school in this way. We're looking forward to a great discussion. This is the second of 3 Economic Outlook events based out of each of our global campuses. So about a month ago, we held Economic Outlook in the US in downtown Chicago. We had a fantastic turnout, both in person and virtually, and an amazing conversation with Chicago Booth's Randy Kroszner, Raghuram Rajan, and Wenjin Du, moderated by Bloomberg's Kathleen Hayes. If you'd like to read some of the takeaways from that event, please visit our Economic Outlook website for details. So the next one, after this one, will be Economic Outlook in London, Tuesday, March 7th from 7 to 8 p.m. GMT. And that's going to be a bit different from the events we've had in years past. And the reason is that we're partnering with UChicago's Institute of Politics, IOP, to provide a political and economic outlook throughout the EMEA region. So the expert panel there is going to examine the links between economic and political environments and offer insights for business leaders and policymakers facing a challenging 2023. So this is going to be a hybrid event based out of our London campus, the Rothman campus. And registration is open on our website, chicagobooth.edu. Now, Booth has a long tradition of informing public discourse through a variety of platforms. We have the Initiative on Global Markets. We have our Chicago Booth Review publication. But then, of course, the oldest of them all is Economic Outlook, which we began back in 1954. And Economic Outlook provides a forum for our path-breaking thought leaders to confront the future, evaluate emerging trends, and share insights to help reframe our understanding of the world to come. Now, many of you may already know that this is a very, very special year for the school. It's our 125th anniversary. And so throughout 2023, the school will celebrate this milestone as we reflect on 125 years of ideas, innovation, and impact. And we'll have special events across the globe featuring faculty, alumni, students, and leaders from the business community. So look out for that. So we have a fantastic panel today and a great moderator. And they're going to come to you with insights related to inflation, interest rates, and the risks facing Asian economies. Just a couple of housekeeping notes before I introduce the panel. This is a 1-hour discussion today. And throughout, we encourage you to submit questions for the panel. Please use the Q&A function through Zoom to submit your questions. And our moderator, Emily Tan, will be monitoring questions and bringing them up for discussion through the meeting. So with that, it's my pleasure to introduce our panelists. Pranjul Bhandari is the Chief India and Indonesia Economist and Managing Director at HSBC. Previously, Pranjul completed a President Fellowship at the IMF in Washington, D.C., and a Mason Fellowship at the Harvard Kennedy School. She also worked at India's Ministry of Finance with the Chief Economic Advisor and at the Planning Commission with the Deputy Chairman. So she's held roles as an economist covering Asian markets at Goldman Sachs, at the UK's Department for International Development. And in 2019, she was a member of the RBI's Committee for Developing India's Housing Finance Market. So Pranjul has been named the best individual for research in India by Asset Magazine and was featured in Forbes' list of 20 self-made Indian women. We're really thrilled that you could be here, Pranjul. Thank you. So then next we have Chang-Tai Hsieh from our faculty. Chang-Tai is the Phyllis and Irwin Winklereed Professor of Economics and PCL Faculty Scholar at Chicago Booth. Chang-Tai has done path-breaking work on growth and development, and he's been a visiting scholar at the Federal Reserve Banks at San Francisco, New York, and Minneapolis, as well as the World Bank's Development Economics Group and the Economic Planning Agency in Japan. Thanks, Chang-Tai. Then, of course, we have Randy Kroszner, sort of the Dean of Economic Outlook, if you will. Randy is the Norm Bobbins Professor of Economics at Booth. He was the Deputy Dean for Executive Programs for the past several years. And before that, outside the Booth, he was the Governor of the Federal Reserve System from 2006 until 2009, during which time Randy chaired the Committee on Supervision and Regulation of Banking Institutions and the Committee on Consumer and Community Affairs. So Randy was recently appointed to serve on the Bank of England's Financial Policy Committee, and that term begins this month. Thanks, Randy. And finally, we're thrilled to have as our moderator, Emily Tan, who's the senior correspondent for CNBC International, covering business and financial stories on Hong Kong, China, and the Taiwan markets. She joined CNBC in 2007 as the lead Hong Kong reporter, and she's covered major news events such as the presidential elections in Taiwan, Hong Kong's umbrella movement, social unrest in 2019, and the impact of severe weather events such as the super typhoons. Thank you very much, Emily. And with that, let me hand it over to you.
Thank you very much, Dean Rajan, for those welcoming remarks. And thank you, everybody, for being with us here tonight. Good evening from Hong Kong, and a good morning if you're getting up early stateside to join us for today's event. I'm told that there's over 1,000 people that have signed up, and I can see over 280 people are online with us now. So thank you very much for joining us here today. And I just have to give a shout out because I've got a few friends also in the audience, some alums, some friends of Booth School, and also a shout out to Hong Kong EMBA student Andrew Yang, who said that he's going to be tuning in tonight. So thank you all and welcome. What an incredible turnout. Thank you for taking the time to join us and for what is going to be an engaging discussion about the biggest issues facing our global economy, inflation, interest rates, and risks facing Asian economies. Our panel tonight here will dig into these issues and what it means for Asia. Hello to Randy, Chang-Tai, and Pranjul. If you have any questions for our speakers, as we've heard, you can submit them and I'll try to incorporate as many as I can into our ongoing discussion within our designated time. We will wrap tonight at 9 p.m. Hong Kong time. So we start our discussion on China. Asia makes up 60% of the world's population, 4.7 billion people across 50 countries, and is home to the world's #2 economy, China. For almost 3 years, China was closed to the rest of the world, including to us here in Hong Kong. Now, in fact, all 14 borders with the mainland have only just reopened as of yesterday, and the daily quotas going in and out finally scrapped. So it's very timely that we can get to talk about the reopening here tonight, and this is where we begin. The reopening of China, which has been ongoing since January the 8th. My first question goes to Randy. Talk to us a little bit about how do you assess this rebound, this reopening that we're seeing in China, and which countries in Asia are best placed to benefit from this?
I'm delighted to be with you, and hopefully soon I'll be with you in Hong Kong for future economic outlooks. Certainly, this is a sea change that I think no one anticipated just a few months ago, that there'd be this rapid reopening of China. And it has very big implications both within China and globally. So certainly within China, it can lead to a revival of domestic demand, which is something that had been quite clamped down with the lockdowns. And so now that they seem to be moving beyond that, that is going to generate a lot of domestic demand. Domestic demand will then subsequently lead to more demand globally. So it will have big impacts on commodity prices and the imports and exports. It'll have an important impact, I think, also on just the engagement with China. China, as you had said, was basically cut off for quite a few years, and now it's re-engaging. Exactly how it will re-engage be very interesting to see. Obviously, there's some tensions that are related to a balloon that has just flown over the U.S. So there's an opening, but there also may be some tensions that are there. I think a lot of the countries that are in the broader supply chain going in and out of China will benefit from the reopening of China. But I think we will still have to see how much China will revive. I think some people have tried to apply what's happened in the West to what will happen in China, that you'll have this explosion of domestic demand. I don't see that. I think one of the lessons that was drawn from what happened over the last few years is that the high Chinese savings rate will stay high. People were saving because they weren't so sure that they could rely on the government to provide them with health services, with a lot of other support services. And I think they've found that out in the last few months, that there was this reopening, there wasn't a lot of support from the readiness in the hospitals. So I think the savings rate is going to stay relatively high, not quite as high as it was, but it'll stay relatively high. So I don't think you're going to get the same explosion of demand as we had in the West, US, and other countries.
Chang-Tai, the world has watched this dramatic 180 in China's zero COVID policies. What are some of the implications on China's economic policy?
Yeah, so thank you, Emily. Let me just say three things. One is that I think it seems clear that COVID zero was unsustainable for China. Second, part of I when you look at what's happened, the reversal of COVID zero, I think, was part of this broad shift that we have seen coming out of China roughly in the last month. So it wasn't just the end of COVID zero, but second, it was also what you also start to see was, I'm going to call it, it looks like it's the end of what the Chinese call wolf warrior diplomacy. What you see is Chinese diplomats and changing their tone towards the world. The third thing, which I think is potentially the most important, is also just a sharp reversal, at least a sharp announced reversal of the policy in roughly the last 5 years of the crackdown that started in 2018 on the largest Chinese conglomerates, and then for maybe the last 2.5 years on the crackdown on the Chinese tech firms. Among these three things, I think COVID zero, it's clear that that's over. That's over. That is irreversible. The other two things, it's not yet clear. It's not yet clear whether this is going to be whether this is really the end of wolf warrior diplomacy. And then the third thing, which is the crackdown on, I'm going to say, the largest private firms and the most successful private firms in China, whether that really is permanently over. And to get to one of the questions that you asked, Randy, I think that if it's real, I think the biggest beneficiary are going to be the Chinese themselves, if this really is over.
Pranjul, your expertise, of course, India. China's lockdown has impacted supply chains and factories, forcing companies to diversify into other countries. Talk to us a little bit about how you're seeing this impact the region.
Yeah, thank you very much, and great to be here. So I think in the pandemic years when we were all locked up, two new sectors of growth emerged in India. The one of them is a rise in high-tech exports. And it sort of goes back to before the pandemic. It goes back to about 2017. And my sense is that when global value chains across the world were rejigging somewhat, India actually gained global market share for some high-tech exports. And these include, things like mobile handsets, drugs and pharma, some specialized machinery, auto and auto parts, and IT services. In fact, I think the IT services part is the most impressive. And, India is no longer just, your call center, and it's also no longer your software solutions provider, but it's actually become an important part of research and design of many MNCs. So you have this MNCs setting up what they call GCCs, Global Capability Centers in India, which does a lot of their work across the board, from software solution to design to R&D. And I think this sector has really taken off. So I would call this high-tech exports of both goods and services. This sector has really taken off. The other new sector, which I'm excited about, is this entire digital tech startups. Now, India's got an impressive public digital infrastructure, which it's built over the last decade. It's public, it's interoperable, it's efficient. And a lot of startups are plugging into it with business ideas, ranging from financial payments to e-commerce, agri-tech, health tech, all kinds of things. And this is attracting a lot of inflows. Over the last 5 years, tech startups have attracted about $120 billion in inflows. Today, about 50% of India's FDI is actually digital, compared to just about 20% about 5 years ago. And my sense is it's basically creating a new entrepreneurial class, which I think over time will be good for growth. And so in my view, these two sectors are exciting, they are new, and they point towards higher potential growth in India over the next decade.
Thank you. I want to talk about some of the event risk that we're waiting on. First, of course, would be the State of the Union. President Biden will be delivering his second State of the Union at 9 p.m. Eastern time. So we're about 10 hours or 11 hours out from that. How would you assess, guys, the current state of Sino-US relations? Of course, there was the Chinese balloon incident that floated into US airspace, shot down on presidential orders. Some had expected a tempering of relations under the Biden administration following what happened with Trump's trade war. But after this weekend's events, relations have taken a turn. Chang-Tai, can you talk to us? What do you see as China's foreign policy stance with the United States?
I think that the critical event was what happened last October in 2022 when the U.S. implemented draconian export controls on the Chinese semiconductor sector. My sense is that these controls really shook the Chinese leadership to the core. They were also really, really unprecedented. That if you think about the history of export controls, normally they have been applied to certain firms, state-owned firms, or firms that have been found in violation of sanctions. What was really draconian about U.S. export controls that were announced in October of last year is that they apply to every single semiconductor firm in China, regardless of whether they're state-owned or private, and also regardless of whether they're Chinese or not. That is, the export controls applies to Intel's operation in China. So within a year, Intel has to leave China, or else it also will be subject to export controls. It applies to Taiwan Semiconductor, which has a facility in Nanjing, China. The second thing is that I've never seen this before. It also made it illegal for an American citizen and a permanent resident visa holder to work for a Chinese semiconductor company. And this really hurts because you may know that a lot of the senior executives and a lot of the scientists who work for the Chinese semiconductor companies are American citizens. That I've never seen, I never in the history of export controls have I seen something like this. My sense is that these sanctions really hurt. They really hurt, and I think that part of the shift towards the engagement with the world is that the Chinese authorities are trying to find a way. They're trying to find a way out. They are trying to find a way out of these sanctions, and also the fear is that these sanctions are going to expand to more and more sectors, that they're just going to grow, that they're not going to they're not going to diminish. So I guess the quick answer to your question is that I think that there is, I think whether you think it's right or whether it's wrong, I think that there's now a consensus in the U.S. political establishment that what the U.S. has to do is to basically block Chinese technology, block economic progress in China, and I don't really see, I don't really see an off ramp.
Okay, well, let's pick up on that. Randy, the Biden administration reportedly putting a complete ban on American technology to China's Huawei technologies. With this latest move, is the US intensifying its crackdown on the Chinese tech sector? And what are the wider implications of shutting off sales for US companies to China? Would you say that it's not as devastating for the US companies as it was before?
I very much agree with Chang. I mean, this was really a move that was much further than anything that the Trump administration had done. And also, if you look back and see all the things that Biden has done, they're really building on or extending what Trump had done. So it's not like there's something that Trump and the Republicans have one view and Biden and the Democrats have another view. Exactly as Chang was saying, I think the consensus has really moved. And it's not just focusing on one company, but focusing on employees. So this is something that I think is going to continue to go further and make it more and more difficult for U.S. firms to be engaging with China. We're doing either individuals working with Chinese firms for doing investment in China. And I agree with Chang that it's going to grow. So this is really going to change a lot of the strategy for many firms that had seen China as the world's second largest economy, potentially becoming the world's largest economy. Investing heavily there and trying to be on the cutting edge there. We still have a lot of investment and a lot of sales related to retail products and luxury products. So far, they have not come in the crosshairs. That could potentially change over time, and I think that's what's very interesting to look at of where this might go. Right now, it's primarily in technology, and it's going to mean that there's a separation, sort of a deglobalization, at least in that particular sector, and I think that is being driven by the U.S. The U.S. and it's I think a consensus between the Republicans and the Democrats, and also the U.S. is trying to build a global consensus on, not something that is just a one-off for the U.S., but the U.S. is trying to convince, in some cases, is convincing its global allies to take the same approach.
Yeah, with global allies, we're also seeing this thing called friendshoring. Pranjul, Janet Yellen, Treasury Secretary, visited India in November and said that the country is an indispensable partner to the United States, and then pitched this friendshoring strategy that is aligning trade and investment with a group of countries with shared values, all in an attempt to cut the role of China. So what are the economic benefits to India by signing on to this?
Yeah, I think one of the most recent things they've signed up on is the India-US initiative on critical engineering technologies, basically more cooperation in technical areas like the development of semiconductor ecosystem in India, getting more patient capital for India's startups, quantum computing, and all of these areas. I think this is very interesting that the links between India and US is not just sort of confined to trade, goods trade, but it's become sort of bigger than that, and it's also for future technology cooperation. And I think here there's sort of a lot of exciting things happening in India. It's gone on and signed similar sort of pacts with the UAE, with Australia. It's on the verge of signing something with Britain, with the aim being that the cooperation should just not be in terms of goods trade, but also in areas such as services, investment, technical cooperation, and sort of a wider economic development. And I think this is a new way of moving forward, lots of bilateral agreements with a lot of countries you want to partner with.
Now, this is a question that I'll put to the floor. This word was mentioned earlier, deglobalization. Are we seeing a decoupling of US-China, and is there no turning back?
Well, no, one never knows that there could be no turning back. I think there can be changes that would allow a turning back, but I don't see that in the near term. I really see this as sort of an attempt to, in some sense, undo what's been going on for the last 4 or 5 decades as China opened to the world. Trying to integrate in was pretty much an explicit part of U.S. as well as global policy, bringing China into the World Trade Organization. It was there that China would then be developing in a way that would be sort of a parallel to Japan, or protection of intellectual property with development as there's more intellectual property that's developed in China. But China has developed in a different way, and I think the world is now struggling to figure out whether it is possible to try to decouple, or at least partially decouple. I don't know whether that will be what will happen in the long run, but that's certainly what an attempt is being made, at least in the short term, medium run.
President Xi Jinping is going to be starting his 3rd term as president. This is historical because it's never been done before, when the annual National People's Congress is held next month. Chang-Tai, this is when the country's full year economic forecasts will be revealed. Are you looking out for any growth number?
I mean, it's clear what number is going to be announced. It's going to be 5. And my guess is that they're going to reach it. I guess I am more focused on what are the long run policies that they adopt. I'm looking at who they're going to appoint as the next governor of the People's Bank of China. It's not immediately apparent to me. I am looking for who they are going to appoint to occupy sort of the key planning groups in the Communist Party that are in charge of economic policy. Because part of what happened last November in the last meeting was that the two key central economic figures were their terms in the Central Committee of the Communist Party were not renewed. This is the first person was Liu He, he's leaving, and then the current governor of the People's Bank of China, his appointment in the Central Committee of the Communist Party was also not renewed. And there's nobody obvious. So that's there's nobody obvious that has economic and business expertise. So I'm looking to see who these next people are going to be. So that specifically is what I'm looking for in terms of the next meeting of the National People's Congress. Yeah, and then let me just add to the answer that Randy gave in response to your previous question, that I think that the tension is that I think the way that we in the US, we have always thought about globalization is that what globalization does and integration is that it brings countries into, let me just call, it brings countries into what I'm going to call Pax Americana. So it's really very much the model of what happened to Japan and what happened to Germany after the war. They were our enemies. They were enemies that had a very different political system. And there, the model was that we bring them into the world, we integrate economically with them, and then we bring them into this into this Pax Americana umbrella. And I think that it's worked. It's worked. And I think that very much U.S. policy towards China in the last 40 decades was really the same model. Yeah, we don't like the fact that it's a Leninist political system, but in the same way that we didn't like Nazi Germany. We didn't like Nazi Germany. But look at what happens when we integrate, when we bring you into the global economy. And then China turned out very differently. That is, it grew strong economically. There's no question that that's what happened. But it never but it never bought into this vision of Pax Americana, and it ended up obviously developing its own different vision, its own different model, and that's sort of I think what the U.S. is struggling with, which is at the same time globalization, integration, trade has been at the core of American policy. But at the same time, sort of this vision of this world, I'm going to call it the Pax Americana version, was also the other central pillar of the way that the U.S. thought about the world. And I think it's trying to find a way to try to reconcile these two things. And I don't think that it has really come up with the way, and sort of and it's stumbling towards something. It's a part of the what they've been doing, they've been trying to do about China is to try to stumble towards a way to try to resolve these two tensions.
When we look at China's economy, we also have to take note that it has a falling birth rate and the implications there. Pranjul, India's population may have already overtaken China this year. What are the economic implications and what opportunities does this present for India?
Yeah, I think it's a big challenge. The fact that India needs to just create many more jobs in the next decade. My sense is that it needs to create about 60 million new jobs in the next decade, which is more than what it had to create in the previous decade. And I think that's going to be the biggest challenge facing the economy, as we sort of go towards the next couple of years. Now, will we be able to get this kind of, job momentum going? My sense is that at this point, what looks exciting to me is, the new sectors that I spoke about, the high-tech exports and the startups. Unfortunately, they don't create that many jobs. I call these sectors New India. They sort of make up 15% of GDP, but they employ only 5% of the labor force. So we can't bank on these very fast-growing sectors to create the jobs. And we really have to go back to the rest of the economy, which is, the agricultural sector, which needs a lot of productivity improvements, which is the manufacturing. India's big problem has been that it's grown rapidly, but in a way, it just jumped from agriculture to services. It never really became a strong manufacturer, and it was never able to create those manufacturing jobs. But now we need to really revisit those parts of the economy because we need those jobs. Is it possible? Look, a couple of years ago, I would have said, it seems unlikely, and I would have sort of given you a very negative outlook on the economy. But I do think that innovations like the public digital infrastructure can help create jobs in the economy. The startups we have right now, in their first avatar, they've been focusing primarily on services, e-commerce, fintech, edutech, health tech, good stuff, but not the real job creators. My sense is that in their second avatar, if they can go and take on more challenges, for instance, digitization of manufacturing and agri-tech, I think that's where we can get a lot of the jobs from. So, from that perspective, I think there is a lot that can be done. I'll give you a simple example. India has a problem. It has too many firms which remain too small for too long. They never grow. They never enjoy economies of scale. But if you get a startup or, any other way of combining, say, 10,000 glass-making companies, combining their orders, getting them bulk discounts in the input market, teaching them quality checks via digitization, giving them access via e-commerce to export markets, giving them access via things like credit aggregators to bank credit, teach them how to maintain credit histories. You can really help them simulate scale. And I think that could become important for these firms to then grow over time and then, create jobs. So a very long answer to your question. I think we need India's big challenges that it needs to create productive jobs. And I think the public digital infrastructure can come to help there in the next decade.
Now, China's reopening, together with a resilient demand in the United States and Europe, as well as easing energy costs, have allowed the IMF to raise its global growth outlook for the first time in a year. Randy, are central banks across the world likely to continue to tighten to fight inflation? And what is the risk of a global recession?
This is a super, super important question. I just want to add one little piece to the demographic question that you raised before, because it also helps to answer the first question that you posed, the challenges for China. What does that mean for the rest of Asia? One of the things that has been a dramatic change in China is this now shrinking population, and in particular, shrinking working age population. A lot of China's growth had been driven by more people coming in from really the informal sector, from the inner parts of China to the major cities, to the coastal region. Ultimately, economic growth is the number of hours worked and the output per hour, the productivity. And you're going to get a lot fewer labor hours coming in because you're having a shrinking working age population. And getting back to what Chang had said before, they're now seeming to ease up on some of the crackdown on the private sector. They're going to need to do that to get to that 5% growth rate. In the past, it was a bit easier because you could get to it through a lot of people coming in, even if productivity growth wasn't so strong. Now, unless you have strong productivity growth, you're not going to get that 5% growth. But on this point about inflation, so central banks obviously have been slow on the uptake because inflation went up in many countries, not as much in Asia and certainly not as much in China as in the US, Europe, and a number of other places. But central banks have now moved rapidly. The US Fed has moved faster, I think, than it has ever moved interest rates up. And of course, that had a very big global implication, not only for pushing other central banks to raise their rates to try to staunch inflation, but also it led to a dramatic strengthening of the dollar in the last year. Now that people seem to think that there may be a possibility of a soft landing in the US, I sometimes refer to that as an immaculate disinflation. That is, that we can have inflation come down without the unemployment rate going up significantly. We've never done that before. I don't want to say it's impossible, but no, I also wouldn't want to bet on something that we've never seen before. People are becoming very optimistic about that the Fed and other central banks will be able to keep rates high and continue to raise rates. The U.S. Fed, I think, is going to continue to raise rates. They've stepped down the speed with which they are raising them at each meeting, but I think they're going to continue on. We had this remarkable jobs report for last month, just truly remarkable. I think took everyone, including everyone at the Fed, by surprise, that the unemployment rate continued to go down. The number of jobs created was much higher than anyone had expected. The revisions for the previous months were up, not down. So the labor market is really, really strong. And that's true in a lot of other countries, too. The Fed is going to keep at it until they see the labor market weaken, because they are not going to be convinced that inflation will be able to come down on a sustainable basis unless the labor market weakens. The challenge is, can you just weaken the labor market a little bit without weakening it a lot? And I think that's going to be the most difficult challenge for central banks. I think now people are becoming very optimistic. Oh, the labor market's still strong, despite the Fed having started almost exactly a year ago in March with its tightening cycle. Other central banks subsequently. Labor market strong, but I think that cumulative effect will start to have downward pressure on the labor market. Also, the Fed has said, and I think other central banks are going to keep their interest rates high. Well, as inflation comes down, if you keep your nominal interest rate at the same level, the real interest rate, that is the inflation-adjusted interest rate, is going up. And so what's going to happen is that the Fed will stop, let's say, around 5.5%. But as the inflation rate comes down, let's say it comes down about 2 percentage points or so, 2 or 3 percentage points or so over the year, that's effectively a tightening of the real interest rate by 200 to 300 basis points. And so I think you may have far more challenges in the second half of the year or next year from that kind of tightening than we've seen so far.
Randy, if we can keep your mic on, because one of the other event risks today, so not just the State of the Union, we also have Jay Powell today speaking at the Economic Club of Washington. And of course, his speech will draw extra scrutiny on the back of the upbeat jobs numbers. What are you looking out for from him today? What else could he add into the commentary that's floating around? And will they pause? Will they 25? What do you expect today?
I think he's going to keep on message that they're going to keep at it. And I think he's going to talk about his concerns about the services part of the economy, which in the U.S. is the vast majority of the economy. The vast majority of the costs in that services sector is related to labor. Labor market is still red hot. That means that the Fed is going to be concerned about the inflation pressures continuing. So that means that they're going to have to continue on their interest rate increase path. I think he's going to make it reasonably clear that they'll probably stay at around the way that they've been doing it recently, 25 basis points a meeting, and look to see what's happening. But I think he's going to make it clear that that super strong labor market report is not going to lead them to slow down anytime soon.
Now, with Fed monetary policy, it doesn't only impact the U.S., but global financial markets and other central banks. We are also seeing a sharp strengthening of the dollar. Apple felt the impact of the strong dollar, which put an 8% hit on its earnings. Pranjul, talk to us about the implications of the Indian rupee. And also the second part to my question here, since we're talking about interest rates, the RBI has a decision due tomorrow. Are you expecting a 25 basis point hike?
Yeah, thank you. So look, on the dollar front, actually the dollar strengthened a lot, but since October it has also weakened. So it's sort of turned on that front. But India's own external finances have been a bit vulnerable over the last year, with oil prices being so high. And India imports 80% of its oil needs. Its trade deficit ballooned. But it was not just oil prices, even the non-oil deficit actually increased. So there was a lot of problem. The current account deficit ballooned to a very unsustainable level of 4.5% of GDP. Thankfully, policymakers have been taking the right steps, raising rates, letting the rupee depreciate on a trade-weighted basis, ensuring that they stick to the fiscal consolidation path. And I think all of that have begun to narrow the trade deficit in the last couple of readings. So I think that's a positive development. But I think the challenge for the next 12 months is going to be different. It's not going to be as much the problem with the current account deficit as it's going to be on capital flows. And I think here, many changes are happening. With China reopening, we are seeing a lot of capital inflows getting redirected to North Asia. We're also seeing, decent equity capital inflows into ASEAN. But India has actually seen equity outflows year to date this year, about $4 billion. And I think, that makes the rupee a bit vulnerable, on the margin. And though we don't have a problem with the trade deficit like we had last year, we need to think carefully about, how capital outflows may impact India. Having said that, over long periods, we find that portfolio inflows into India and China and mostly all of North Asia are actually correlated. Perhaps they're both driven by the same things, global growth, global risk appetite. So hopefully over time, inflows will come back into India. But as of now, the year, it has been weak. As for your question on RBI, yes, RBI needs tomorrow. The RBI has been hiking policy rates through the last year. We expect another rate hike tomorrow, but of a smaller quantum. As in, they were doing 50 basis points rate hikes, and they moved to 35 basis points. And I think tomorrow we'll see a 25 basis points rate hike, taking the repo rate to 6.5%. And I think as of now, that would probably be the end of the rate hiking cycle, though risks remain. And the reason for this is, inflation seems to have peaked in most parts of the world and also in India. A year ago, inflation was close to 8%. Right now, inflation is likely to fall under 5% in the next couple of months, which is positive. So I think that will basically bring an end to the RBI rate hiking cycle. I can go on and on about inflation, but we'll see if the audience is interested.
Now, as we stick with India, the world is also watching what's happening with Gautam Adani. Indian policymakers and regulators stepping in over the weekend to calm nerves over the concerns about his group of companies. The saga now entering into its third week, and the value of all of his stocks slumping by more than half. This is after the U.S. short seller Hindenburg report accusing of stock manipulation and accounting fraud. Now, there is a question that has come in on the floor asking about this, and I'll put the question to Randy first. Adani has said that the group's goals are in alignment with India's needs. What are the risks of having a powerful company that is tied so closely to the economy, but also linked to political power? And if I can just weave in a little bit of the question coming in from the floor, are the risks here self-contained, or is Adani an outlier? Is there a risk of spillover to Prime Minister Modi, to India more broadly, or extend further to global investors in even emerging markets?
For a super important question, and I'll give a broad answer, and then I'll defer to others who may have more specifics, because I don't know enough about Adani and the empire to be able to say. But this is exactly the sort of thing that one wants to be monitoring for, looking for interconnections. With large organizations that have a lot of operations, not only within a country, but across countries, there's always the potential for some sort of disruption. Starts one place to move on to another. And also sometimes they're not really transparent. The analogy that I usually use is an iceberg. So, what took down the Titanic was not what was above the water, but what you couldn't see that was below the waterline. And that's always the challenge, because regulators as well as market participants see things that are above the waterline, see things that are in financial reports, and see things that are on central exchanges. One of the questions that's been raised is whether people are seeing what's actually accurate or not. I don't have any view on that. I don't have any insight into that, because I've not studied this. But those are the questions that you want to ask, because if you're not sure the iceberg or what's under the something that's dangerous, that's under water, you want to look much more carefully into it. So it has the potential for those kind of fragile connections to have bigger implications, but I don't have a view on whether it does or not.
Pranjul, what does this?
Yeah, Emily, can add something to your question? I perhaps have a more idiosyncratic view on this. I guess I would focus more on what are the long run implications for India, and let me put it in this way. The largest Indian companies for decades has always been these large conglomerates. So that we know. What I've been watching with concern, not really in the last month, but in the last few years, has been the growing concentration of economic power in India by what's called the two A's, not just the Adani group, but also the Ambani group. The Ambani, and you have seen these two groups spread their tentacles over larger and larger segments of the economy. And I think that when you look at what they have done, I think on net, I think it's been a huge, in my view, a huge negative for India. Like if I look at, say, what's one of the biggest barriers to textile exports from India, that it's basically that they need imports of the cloth that has basically been monopolized by one of the companies that's owned by that is part of the Ambani group. Or if I look at, say, what's happened in the mobile phone sector in China, in India, that it's been slowly monopolized by one of the companies that's part of the Ambani group, and the other mobile phone providers have been slowly being pushed. They have been pushed out. So I perhaps have an idiosyncratic view that if in fact the Adani group does go under or it suffers, it suffers, I think that in the long run, that on net will be a positive thing for India, because you are going to see that maybe it's going to be the end of these monopolies and these inefficiencies in India. That I think is what I would ask, rather than how much money Adani has lost, or what are the risks of a financial collapse. I mean, that is there, but I think that the more important issue is, what does that mean for where India is going to be 10 years from now?
Thank you. Pranjul, what does this say about the financial oversight in India? And will this lead to systemic risks in the financial system?
Well, the direct exposure of India's domestic banking system is not very large to this group. I'm not an equity analyst, but from all the numbers that we have, it's not very large, and I'm not expecting it to be a financial contagion that starts from here. But I actually want to take a step back. I hear what the other speakers have to say, and it's a very interesting point. But I really want to talk about how India's financial sector has evolved over the last couple of years. The banking sector has gone through a huge cleanup, and actually it was done by Dr. Raghuram Rajan from Chicago booth when he was the RBI governor a couple of years ago. And since then, the banking sector is much stronger than it's been in decades. As in, non-performing loans have fallen, the credit adequacy ratios have risen. Banks are much stronger than they've been in a very long time. And on aggregate, even the corporate balance sheets have become much stronger and better than before. A lot of corporates were able to shed debt during the pandemic period. In fact, just a couple of weeks ago, there was a lot of excitement that because balance sheets are now much cleaner than before, perhaps, when global growth recovers, India will also recover, and this time it will recover on the back of private investment. So, look, I don't want to, I don't want like sort of one event to take away that entire backdrop that India's balance sheets have actually improved a lot over the last several years.
Chang-Tai, China Evergrande, we watched a similar scene play out in China with a big company there. It unfolded into a debt crisis. Now, whose fault is it that allows these bubbles to exist?
I'm not sure how to answer the question about fault. I mean, I can explain what happened, that, and it's part of the crackdown. That one of the that, I mean, if you want to go back, then what one of the consequences of the 2008 financial crisis in China was that there was a dramatic change in the financial system. That is the way that China. So China's response to the 2008 financial crisis was to implement what in China was called the 4 trillion stimulus program. The way that the 4 trillion stimulus program was financed was that it was financed by the creation of these off-balance sheet companies that became known as the local financing vehicles. So these were basically companies that were owned by local governments that borrowed money from banks, and they initially were set up to fund the 2008 fiscal stimulus program. Then what happened after the fiscal stimulus program was over was that these companies took on a life of its own. So this was essentially sort of the wave of lending that took place out of China. For years after 2010, the central government tried really hard to curb the activities of these local financing vehicles. They tried multiple times. They failed primarily because of pushback from the powerful local government officials. They finally did it in 2019 in terms of implementing strict rules on what these local financing vehicles could do. One of the consequences was that the companies then that these local financing vehicles were lending money to, like Guangzhou Evergrande, ran into trouble because their source of money turned dry. And to go back to sort of what one of the things that we first started to talk about, one of the policy reversals that was announced a month ago was that the crackdown on debt and the crackdown on lending that's initiated in 2019 and that was directly responsible for what happened to Guangzhou and Evergrande, they announced a complete reversal of that. So the question is, I mean, this is part of the package of support for housing, support for the construction sector that was announced a month ago. So then the question is, how do you want to think about a company like Guangzhou Evergrande that on net was that company a contributor to China, or did it hurt in some way? And that's another long discussion about how to think about that company. But then the collapse of that company was really directly a consequence of the Chinese authorities' attempt to try to curb what have been growing since 2008, which are these local government financial companies.
There's a question that came in on the floor that I wanted to get to, asking about Russia. That's, of course, one country that we haven't spoken about yet tonight. Do you expect any repercussions for China as they continue to economically support Russia? And I put this question just to the panel, whoever can speak.
I mean, the answer is yes. I mean, it's not just Russia, but to go back to one of the things that Randy and I were talking about, which is the views in the U.S. towards China, the view towards the U.S. and China. Russia is, I mean, it's probably not the central one, but it's one part of it. It's one part of it. It's just part of this broader, I'm going to call it this broader package that's been coming out of China. So if you ask, if I were to, there's just been the sequence of events, the Uyghurs, what happened in Hong Kong, and Russia is the most recent thing that just adds, right? It just adds to it just adds, and by now it's led to this consolidated political consensus in the U.S. that this is what we got to do. So it doesn't help, but I'll say, but I wouldn't say that it's the central thing. It's just one more, right?
We just have a couple of minutes left until 9 o'clock. So I'm going to ask for some final thoughts now. And I'm just going to put out a couple of thoughts, and you guys in your own time can give your response and how you want to wrap things up here this evening. What may be some of the biggest risks for Asia in terms of economics, geopolitics? How will Asia navigate the rough waters between the US and China tensions? And what is the business response to potential economic headwinds? Give us some of your final thoughts.
Very big question.
Yeah, let me just say that I think that the main thing on the horizon is really how Asia is going to survive decoupling between the U.S. and China. I mean that I think is the main thing, because it's the tension between your largest trading partner, which is China, and the country that has been, I'm going to say, the pillar or the guarantor of your security. I mean, of your security, and that it really is. I think that what I see in Asia is that most of them, the vast majority, they really desperately want to avoid taking a side. They desperately want to avoid taking a side, and whether that is going to be possible, I don't know.
I think that is the key challenge. And so I think the key opportunity is, so many countries of Asia have young populations and growing populations. And that's a very strong contrast that we were discussing with China, as well as with much of the West, which has declining populations. So being able to make sure that you're educating those populations well, that they can then provide alternatives to China, or provide inputs into China in terms of the in the supply chains, that gives them the flexibility to try to avoid taking sides. But I really think there's a lot of great opportunity there, particularly for countries with a lot of younger people in them. That's an incredible gift that China and the US and other countries just don't have.
I'm going to focus on the next year and want to make the point that there's no escaping a growth slowdown. We see advanced economies are slowing. China is an upside risk, but it will probably only benefit pockets of countries, the tourism heavy countries, or the commodity exporters, or those dependent a lot on Chinese FDI. And if China reopening stokes inflation, stokes commodity prices, then that sort of comes in the way of a lot of the disinflation process that the advanced economies are looking forward to. And we may not see central bank rate cuts very quickly, and financial conditions would generally remain on the tighter side. And that, again, would be bad for growth in emerging markets. So either way, with or without China reopening, I think it is a year in which growth is going to slow. And I think the big challenge for many EMs in Asia, particularly like India, Indonesia, and many others, is to not run after higher growth, but focus on macro stability, bring down inflation, ensure that their fiscal deficits are coming down. The current accounts are in sustainable levels, and I think that's going to be the big challenge. And if they can do this well, then once the global cycle turns, then they can grow quickly out of this. But if they get greedy for more growth right now, then it could become quite messy.
That was a jam-packed 1 hour, and we covered a lot of ground in those 55 minutes or so. My thank you to Randy Kroszner, to Chang-Tai Hsieh, and Pranjul Bhandari. Thank you so much, guys, for the chat this evening, and to our more than 320 guests that were online listening to our conversation for this Chicago booth event. Thank you all. Have a very good evening if you're here in Asia.